Hi, everybody. This is Gary Dean, and this is our nightly video report for Wednesday, October 26, 2016. I don't really have a whole lot to add to what I've been saying, and that's pretty much anybody that's waiting for the big move or the home run trade. They're just getting really, really frustrated. From this top here, I had said that I had a short bias. And I was expecting anywhere from 30 to 40 points. So here we have a high of 2154. We have a low of 2131. So it's only 20 points. Maybe that's it. I would say it would make more sense if there was still more to the downside, but the fact that we have the elections coming up, everybody, and you have the uncertainty here, any drops are getting bid back up, any gap ups are getting sold off. So as much as, it would make more sense to have a 30 to 40 point drop from these levels, and that's basically because of the bearish divergences on the 60-minute chart, and we still may get there. It's going to be, if it does get there, it's going to be in a very, very choppy manner. And today is probably a perfect example of that, where you see the S&P, open was down some 9 or 10 points, and then within a 20-minute time period, you see it rally and go green. So it's a chop fest right now. Probably the best recommendation I can give you is just don't watch it right now. Worry about something else, or don't even worry. Go enjoy something else. Unless you are day trading, that's really it. I mean, they're not even giving you more than a day on these. So we're getting pretty good price action as far as up and down, but if you're looking to try to hold it for more than a day, it's not fun, because you're looking like you have a great trade in place, and before you know it, it's back up above the gap part of it, and that's it. So the fact that we have this uncertainty heading into the elections, we may get, I have a feeling they're going to break this little range right here, but if they head up, they're probably not going any higher than 2162. If they go down, they're probably not going that much further down than 2114. So I just don't think they're going to be able to keep it in this range right here. We're talking about the first top here was on the 14th, so we're 12 days in, and we've only gone from this high here that was at 2149, 2154, so 5 points higher, and that's from these lows here, we've been just getting bids back up. So it's just there's not, I don't think they're going to be able to hold it for this long, another 13 days, but it's, maybe they can. I mean, it doesn't seem like it's that hard for them to hold it, because it doesn't take a whole lot. There's not a lot of participation in this market right now, and so a little bit of buying power, shoots the market up 10, 15 points in a matter of minutes, and a little bit of selling power makes it drop 10 or 15 points in a few minutes. So we're getting some boundaries here that you can work off of, where if the bulls take it above the 2146, most likely they're going to have a quick trade up to this 2154, possibly even go to the 2162. If the bears can push it through this the 2133, then we're probably going to see a quick move down to the 2123 and possibly 2114. So it's not a huge amount of points, and that's why I'm saying I don't know if it's worth even putting yourself through the stress of it. It may be better just to let things play out, wait for the dust to settle, and then from there wait for a trade setup, and then you start making normal trades when we're in a kind of a normal market, if there's a chance of that, because this market has never been normal. But in any case, in this particular situation, I haven't really been pushing anything as far as trades on the long or short side, and it's mainly because I'm just really trying to just hold off putting any stress into your lives heading, because it's just going to it's going to be too quick to be in and out. So here you can see the Bears have not gotten above the 78% retracement level. That's going to be one of their obstacles right there. If they do, then they have the gap above it. That's going to be resistance. I just want to go back. If we take a look, you can see from this low to this high, the Bulls the Bears haven't pushed through to 78% retracement. So we're stuck between the 78% retracement from the low to the high, and then we're stuck between the 78% retracement from the high to the low. And that's it. So we're in a range, and that's really it. On 15-minute chart, we don't really have any bullish divergences, because you can see this drop right here gave us a lower technical reading here, so there's no bullish divergence. We were pretty oversold here, and we had a little bounce up. So again, it seems like it's just working off of your momentum indicators, and they're just really small swings. But you can see that there's some resistance right here at the 2142. That's the moving average that's crossing down. It's a pivot. And then we have the other moving average. So if they pop above it, yes, you know how they're going to do it. They're going to gap over it and probably come someplace up into this level here. But if this does hold it down, then that might be an early cue that we are heading down someplace into this 21-24 range. So that's really about it. The bearish divergences on the 60-minute chart has me very nervous looking long. We just came from overbought levels, and we're only neutral. So I'm not really interested looking long, even though, as you saw today, you can have a really nice quick trade on the long side. But it's just I'm not interested, not until I see some of my indicators looking higher on the 60-minute chart. But like I've said, I'm not really that interested in shorting either, because I just think both sides are risky. But so I'm on the fence. I'm not really pushing anything. I still have a kind of a short-term bias to the downside, so I think selling rallies would work best. But like I said, it's going to be a stressful trade, and just expect a lot of chops. So with that, enjoy the rest of your night, and I'll talk to you guys in the morning.